caught it. Hold on. Sorry, can you just repeat that again? Yeah.
Yeah, maybe I'll just go back to.
Yeah.
So the 200-day moving average and the April lows.
Oh, you need to zoom in on this. Can't see it. Yeah. Can you just zoom in? Yeah.
Just tell me when to stop.
Yeah, it's okay. Yeah, working now. Thanks.
Yeah, so 200-day and the April lows. So we're
Mm,
just sort of rounding it off. It's basically 5,000. And why that's critical, because you would have seen a few sort of talk about, the worst case scenario, the recession trade.
yeah.
If you did break below that 4,963 and the 200-day moving average,
Mm,
with this recent bounce, that would suggest you made a lower high, which is quite similar to the January 2022 price action where you did recover after a
oh,
10% rebound, but that made the topping pattern.
yes.
So for me, for that to gain any real increase the odds of that happening, like I said before, from a macro perspective, look at oil and the key levels on oil is basically $70, $71. And
Mm,
for copper,
copper.
using the CMX copper futures, you're basically looking at $3.95 to $4 as a key support areas. I mean, I think if you did see a break of those two, obviously the risks of a recession would be increasing with the breakdown in those commodity stocks. I mean, at this stage, to me, this is more of you've had the
Correction.
positioning correction. So the
Yeah.
net short position in the yen is now only 3.8%. So basically, the 52% net short has been reduced.
Oh,
So
which line are you talking about? This one I didn't
well,
actually understand. Yeah.
so this is the net speculators positioning down here.
Yes,
As
the
a
pink bar, right?
yeah, the red as a
Yeah.
percentage of total open interest. So that was 52%.
Oh.
It's now negative 52%, obviously suggesting the
Oh
short
wow.
position,
Okay, okay.
and it's now negative 3.8. So this doesn't speak to the carry trade, but it speaks to speculators positioning, which has been
Mm,
unwound basically. And you can see, I don't know how clear it is on your screen, but these bars here represent the net buying of yen futures that you've seen over the past 4 weeks. So that's the biggest
uh,
net buying that you've seen since the COVID period.
that's crazy. Yen futures. Okay, because the topics was down 4 weeks in a row. I was very puzzled. Why? Okay, I
Well,
see.
4 weeks in a
That's yen.
row, while
Mm,
you've had the nets buying, right? So you've had
mm,
4 weeks in a row that the crowded net shorts have been unwound. So that's all sort of carried some similarities there.
mm. Okay, this is fantastic. All right, awesome. But if you don't mind, right, just TPX as well.
Well, let me do NASDAQ and then I'll come back to
Oh yeah, yeah, yeah.
TPX.
That's right.
So the difference in the NASDAQ and the SOX index relative to S&P is that on an intraday basis, you did drop below the 200-day moving average, which is the blue line
Uh,
on these charts. But like the S&P, you're still above the April lows. So again,
mm,
the same level of support is important. It still doesn't rule out the risk of making a lower high, where
yeah.
the highs that you made in March and May become that critical sort of short-term resistance area. So again, if you fail here,
Yes,
you break the April lows, you're going to have the same technical problem that you get a topping pattern
I
developed, right?
see. The April low for the stocks is also the up channel low, right?
No,
That's
so the April lows are here. But
yeah.
if you draw that horizontal line across, yes, then it does coincide with the lower boundary of the trend
Uh,
channel.
got it, got it. Because I saw some analysis that was about the channel, right? If they break below the channel, and that guy turned bullish because of holding bouncing back from the channel. That's for Nasdaq, or is it for stocks? The Nasdaq, does it have a channel? Yeah,
Well, I mean, if I did draw the trend
yeah,
line up here, you
you would have as
likely
well.
have broken it.
Oh, okay.
I
All
mean,
right.
again, if you change your scale, you can, I'm going to just to
Yeah,
prove the points. So this is log scale
yeah.
when it loads.
That Japan fallout was spectacular, right?
Yeah, so if you do it on log scale, you can see that
Mm,
trend channel, you would have been below it. But we can go to just GPO. if you want to draw it with aromatic scale. And this is why the risk, to me, I would keep it
Mm,
simple and just draw those horizontal lines are, to me, far more significant and relevant.
I see. So
Because,
you
and
rely more on the horizontal lines. Yeah,
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 I mean, I'll show you here. This is now, we're looking at this in arithmetic scale rather than log scale.
yeah.
And you could argue that it's held right. I mean, to me, just simple April low
Mm.
and, 200-day
I see. It
on a
coincided.
closing
Yeah.
on the closing basis, the 200-day is still valid, right?
Yes. Yes.
Um, so that's those markets. And then if you look at topics,
Yeah.
the lows that you made last year
Mm.
is now
Oh,
support.
yeah. Damn,
And
I wish I knew this chart before. We didn't know where it was ending. Okay, fine.
well, I mean, that would have only given you any,
Yeah.
but similar to the yen, what I presented on Tuesday, you had that intraday reversal, right?
Yes, yes,
Which
yes.
gave you 2200 as the support area. Now you've got your 200-day and the April lows. So this is
Mm.
different to US market as where your resistance area is, right?
It's ridiculous. I don't even feel the bounce because I did topics on a weekly basis. It was down 4 weeks in a row, right? I see. But it could have been down a lot more, right? It has
On
come
an
back already.
intraday basis, yeah.
Yes. Okay. Understood. And
I mean,
so
the other point you
mm,
need to, I think, sort of bear in mind is, I don't know if you remember these charts of the topics falling
oh yeah.
by 15% within a 5-day period. And the
Mm,
point on these charts is that you normally do get a bounce, but that bounce then develops
oh.
into more of a consolidation pattern and ranging
Oh
period.
yes. I remember you
So
warned about this. Yeah.
again, the topics itself, we've had this bounce, but the likelihood is that you've got
Mm,
2200 to 2600 as a trading range.
got it. That's very helpful. Okay, that's awesome. No, before we go further, right? I just want to check two market index with you. A special set, right? HSCI and CSI 300 as well.
Uh, where is it? So this is HSI,
Mm.
and basically you've held your April and March lows, which is basically 15,300.
Mm.
Um, I mean, the bigger picture is that the market has started to stabilize, but obviously a very wide range that you've got here.
Mm. From 15,000 to 20,000, right? Yeah.
Yeah, I mean,
Yeah.
unfortunately, it is a wide range, but the point is you're not making new lows. You haven't broken down from that. So I still
Mm.
think that we can range trade from here.
I see. It's not flashing a buy either, right? That's good. That's good because there may be changes coming. I just wanted to know if it's bullish, right, or it's partly priced in. But the most recent action has been bearish rather than positive, right? Yeah. Okay.
Well, I mean, I think it's part of a trading range would be my base case. I mean, where there's positive action is what had been the weakest spot, being the property side, is
Yeah.
definitely showing signs of basing out.
Got it. Oh, this is interesting. Then what about CSI 300?
So it's worth noting the divergence that you have built up here.
Oh, yes, you're right. But that's not a new low. The price, it's not a price
Well,
move, is it?
it's a new low for this decline. It is.
Oh, okay. Okay.
So we're looking at, from this divergence that developed here.
Mm. It doesn't need to test the February lows to do that, right? Yeah.
Well,
Okay.
we're talking about the decline that's happened from the May highs. That is showing signs of slowing downside, right?
Yes, that's perfect. Okay. I just need to know this because
Yeah.
I need to pick an index. Okay, that's fantastic. Cool. Then we can go back to the stocks thing, right? Lily Novo, right? Thank you.
Remember from those questions earlier last week, the divergence, the 200-day,
Yes, that was a superstar call.
its support, and now it's sort of bounced. But again, you would expect that
Mm,
prior highs would likely act as some kind of resistance going forward, and then we get some range it developed. I would look that the 100-day coincides with the upper boundary, to see instead of retesting the lows or coming back as low as the 747 area, that 817, 820s support and resistances at that 964 to 965 area.
I see. But what's the reasoning for it retesting the lows? Because the results will
No,
blow
what
out,
I'm
right?
saying is
Oh, it
it's
could
very
the trading
unlikely
range.
to retest its lows. But as far as
Ah,
a trading range forming is, the
yes.
support for that trading range should be more seen at the 817 area rather than 747.
Ah, I see. I see. That's helpful. Any comment about the momentum then? I
Well,
know because
well,
it's
we had the
bounced.
divergence and now it's rebounding, right? So it's not giving us any new signals. This
Okay.
divergence has given us the bounce. Obviously, the catalyst being the results, but that slowing downside with the results, this should recover and, retest the highs that you had back in July.
Yes. Yes. That's awesome. Then Novo? Mm. I know, want to thank you for your great call on this too. Jim Cramer is saying that it's as important as NVIDIA now.
Yeah, well, I mean, definitely for the momentum side. So this, did the same or similar thing, I should say, to
Mm, Lily.
Lily, in that you had the divergence, you had the 200-day.
Oh yeah, yeah, yeah. That's right.
You've had the bounce. So, I mean, you do, and as you can see here, the upper boundary, the 50-day is resistance basically from
Mm,
934 to 947.
mm,
Momentum's rising, so there's definitely potential that you can break through that area and trade up. So, I mean, if you did manage to bottom fish,
mm.
I wouldn't necessarily, because you've had two strong closes here,
Yes, I
sell
think
it
it'll break
because you've
through.
got resistance here. There's potential that it can still trade through that.
Look, they have massive results coming. New trials. So that's why.
Right,
Can
right.
I see NVO? I just want to get the US levels right as well. Yeah, that's right.
So similar that it tested the 200-hour. I mean, I would say that the divergence isn't as pronounced as obviously you got on the European listing.
Mm,
But as far as resistance, again, this is fairly similar, that it's the upper boundary and it's the 50-day. And then it's your prior highs in July, just short of 150.
I see. That's perfect. Okay, that's helpful for NVO. Then 4901 before we go to the funky stuff. Yeah. Lost it. Yeah. Yeah, this thing was.
So basically, this is like the markets in that the support area is the 2023 lows.
Yeah.
We obviously had a sharp rebound from that. So again, it's the next resistance here at
Oh, that's right.
3,516.
Yeah,
And then
yeah.
the 50-day moving average at 3648.
Mm.
I mean, again, this one is one, and you're not going to find any divergences on the Japan setup,
Yes,
but
yes.
some kind of range. And again, I would say like Lily, that instead of looking at to retest the lows at this 3,000 area is more likely support, and 3,500 resistance, and some kind of consolidation like you had there through April and May wouldn't be a surprise after, that sharp decline and equally sharp rebound.
Okay, that's Fujifilm. That's cool. Daiichi 4568.
So this one, basically tested 200-day, the upper boundary of the old trading range. You've bounced off that. So here we can easily sort of expect, the range of essentially 4,900 to 6,100.
Yeah, yeah, okay. Then 4519.
Well, this one's more of,
This is the strangest Japan name.
well, it's more one that, you should be reducing exposure, taking profits because, one, it hit the upside target we've talked about for some time.
Oh yeah,
Two,
divergence,
it's
yeah.
it's set up a divergence. And three, I'd start to make the argument that if this rebound stalls and fails here and you break below 5,800,
Yeah, yeah.
you've got a little top within a bigger trading range, right?
Ah, luckily you told me because I was about to add to this morning. Okay, that's fine.
Yeah, I mean, I would say that, if you do get strength this morning towards that 6.5, 6.6 area, that's more would take profit.
Yeah, I would do that. Okay. Then Otsuka 4578.
So again, probably start to put this one with Shogu where the risk here is that we set up a divergence. So one,
But
we've met the
it's not
upside
there yet,
target.
right? Yeah. Oh
One,
no,
we've
it's
met,
there. Yeah.
yeah, one, we've met the upside target from this range. So,
Yes.
that's played out. And then two, this rebound of the lows that you made from, last Monday's lows. Yeah, any push through here, the RSI is likely to lag. So
Yes,
the
of course.
divergence is going to develop.
Yeah, it's quite a wide RSI range. Okay, that's perfect. We've already taken profit on this. Okay, and then Terumo 4543 and 7747.
I mean, again, you almost sort of feel like we need to ignore that 1 day move, and it's back to the range that you had for the 4 months before, right?
Yeah, I know all the Japan's names look like this.
Yeah.
Oh, so actually it is just neutral, right? There's nothing
Well,
to
I mean,
do.
it's almost, well, it is exactly how it had been from April through to July,
Yeah,
in
I
that at
know. I know.
2,500 to 2,800.
Okay, no problem. Then let's see something that's out of range. 7747. It's right beside it, right on the right tab. Yeah. This one got hit out of the range,
But
right?
it's back into, I mean, if you look at the support area here, 2,000, you're basically there.
But at the lower end of the band, right? Yeah.
Yeah, I mean, it's then back at the April, May lows.
Yeah, it's facing some resistance there, right?
Yeah. I mean, again, I can't give you a divergence on this, and you're not really going to find any of that sort of setup in Japan right now, but you are sort of respecting that 2,000, 2,100 area.
Okay, then that's great. Lonza, Merck, Sartorius, actually. Is in Europe, all in Europe. Yeah, this is tree. No, left of it. Left.
Alonzo.
Yeah, LONN.
Oh, there we go.
Yeah, this.
So yeah, you have had the high momentum peak.
Mm.
I mean, it does look like you retest or move back into that 600 area, and you're likely then set up a divergence.
Okay, got it. SRT tree just on the right page of it, just the right of it, right tab.
That's still holding the breakout where we should look for a move up to 291 to 300.
That's perfect. Then about 8 tabs to the right, it's SMRK. Right, to the right. Yeah, right. More. Yeah, that's right. That's the one. Yeah.
Nothing really changed here in that we're still dealing with that broader range. This short-term breakout, does suggest you're trading to 171 to 176. and that would be more the take profit area.
Okay, that's fine. That's what I was thinking as well. Okay, then three names. One is CSL, and I think it was in the Japan tab, and then two US shorts. Those are the priority ones.
So again, I mean, you're pushing into the upper boundary of the range, and the RSI is lagging. So again, the risk is that we make a divergence and you can't break through this 310 to 315 resistance zone.
Oh, okay. That's not good. Okay, this one reports tomorrow. Okay, then in the US side, sorry, Europe Roche, and then US Amgen. Yeah.
So I mean that base, the breakouts all played out, and now we're getting this sort of higher trading range that's developing here. It does look like it'll take a few more weeks to fall, but with this high momentum peak, there's potential that you can still push to 311.
Oh my God, Roche? Okay. I see. I thought it was a short already. But it's not forming the divergence. What does it take to form the
Well, it
divergence?
needs to at least retest, if not make a new high, right? So you can, I mean, if you wanted to short it here, you just need to use a close above 287, 288 as a stop level.
No, for you to form the divergence, it has to go there, right?
Yeah.
Yeah. Okay, fine. I will adjust this position. Okay, Amgen, AMGN.
So, I mean, a bit volatile, basically bouncing off the 50-day, and you still got an upside target of 353.
What? I thought it broke. Okay.
Well, remember, this momentum confirmed the initial breakout and it's pulled back, and it looks like it's reacting
To the 50
to try
day.
and rebound back. So, again, maybe wait for, if you see a test of 342 and RSI is clearly lower, then you've got a divergence where you make a higher probability of selling it.
Okay. Then on this list, right? REGN. No, just to the right of it. Yeah.
So you had the divergence here, and now you're breaking out of this range that followed that divergence. So from a percentage upside potential or measured move,
oh my goodness,
you get 1168.
Okay, fine. Luckily, it's not that far away, but it's impressive.
Yep.
Okay, that's fine. Sorry, then we go back to Europe. Now it's the normal. I'll go through the tickets, right? GSK. Yeah. Sorry, AZN first. AZN.
I'll just got GSK. I'll go through this.
Yeah.
I mean, so you got the divergence at that support area around 1500. You do have what resembles a base now. So you can get a bit of upside momentum that at least gets you back towards 1625. That's GSK, AZN. Well, the positive thing is you had that intraday move and it definitely held and respected that 11,800 area.
But it's not a high momentum one, right? That's the problem.
Or the fact that momentum is still rising here and it looks like it wants to try and break through the top of the range.
Yep.
That obviously this potential head and shoulders is negated with this move higher, right?
Oh, that's awesome.
And now with momentum rising, there's definitely potential you could break out from that range.
Okay.
And give you an idea, that gives you 13,538 as a potential upside target.
Okay, this is fantastic. All right. Then Novartis and NOVN and Sanofi.
So momentum confirmed the highs here for NOVN. It's had this pull back to the upper boundary of the breakout area. So it does look like it can have another leg higher, or at the very least trade up to 101. Just to go back to this
Superstar.
range.
Yeah.
Yeah, and so basically we test the highs.
Oh, okay. Okay, we test highs. Okay. Then Sanofi, SAN, and then Zeal.
Yeah, you can see the major resistance on that we're testing, which sits at that 96 to 99 area. And it does look like this last move higher, RSI is lagging. So again, top of the range, more of a take profit into that resistance zone.
Okay, that's Sanofi, take profit, right? Yeah, that's okay. The ALC. So there are two names, SHL and ALC.
I'll find it now. ALC.
Yeah, that's right.
So again, you can see that divergence, and since the divergence, it's been consolidating in a range.
Yeah.
I mean, this divergence, I think, has now been worked off with almost 3 months of ranging action, right? So the stock is recovering here. You know, I'd look for a break above 83 to give you a fresh momentum signal, right? And, you know, should that play out, you're basically looking at an upside target of almost 90.
Oh, wow. But it's looking stronger now, right? Yeah.
Well, so this time moving in a range has worked off the divergence, right?
Yes, yes. Yeah, and it was a lower end of his range when it bounced, right?
Yep.
That's just an incredible name. Okay. SHL about I saw on the right. Yeah, right. Further right. Two taps to the right. That's the one.
So this is sort of in reverse, had a trading range broke down. Obviously, that's within a much broader cyclical range. And also the range that it broke down from, we basically met the downside target, which was $48.
Oh.
So I don't have any new downside targets. This rebound that you're getting here, the old support, you know, should be a resistance at 51.85.
Okay, that's awesome. Okay, that's fine. STMN. Here.
That's an interesting profile now with the divergence. Basically the double bottom, so it looks like a cover short. Obviously from a longer term side, also within this cyclical trading range.
Yeah, yeah.
Breaking above the 50-day obviously takes you to 121, which is the breakout point of what looks like a base that it's trying to trace out.
Okay, that's STNM. FME and AFX then we'll do. Yeah, FME is in the left tab. Resilience. Yeah, bottom right. Below. Oh.
See, the RSI there was 31.08, and this last RSI reading at 30.2, so not quite a divergence with this last leg. So that divergence that had built up here had the bounce, but this leg down, the RSI is marginally lower than it was here. So this divergence, you know, had a very short-term bounce and now has been negated. So, you know, potentially we do recapture the bottom end of this range. Yeah. Which is, you know, 33.85. Without the divergence, it doesn't make it a high conviction bottom fishing buy. Yeah.
Yeah. Okay. AFX.
So yeah, not too much change. The divergence here continues to sort of point to the basing pattern and rally potential. So you've got this divergence that can get you back to 71 to 72.
That's interesting. That's very interesting. Okay, that's cool. We're good with Europe. We'll go to US, Merck and AbbVie, and then J&J.
So this breakdown is still intact. And you have a downside target of 106. The old support basically is resistance at the 119 area.
Oh my goodness. Okay. I thought it's worked out. There was a divergence, right? Yeah, that's not okay.
I mean, there might be a few days divergence here,
Yes, I
but
know. It's
that
too small.
bounce is probably going to be limited to the upper boundary.
I see. That's fine. ABBV. So we couldn't find another Lily in the whole of US.
Yeah, I mean, it doesn't. I mean, ABV still has the breakout. As you can see, I've marked up previously. It's still
Yes.
held the move above the March highs, and that still gives you an upside target of 206.
206. Okay, that's awesome. Okay. And J&J and Pfizer. Oh, sorry. I'm BMY first. BMY first. I put that into the wrong side.
So here, I mean, you've already hit the upside target from this base, but you did have momentum confirming the highs here. It has, as you can see, closed the gap that you had. So it does look like, you at least retest the highs from closing this gap, so back to $51. And then you've got that next
Yeah.
resistance at 53.54.
Oh, this is good. Good to know. I've been needing another long in the US. Okay, that's great. It's BMY. PFE and J&J. That FV move was like shocking.
Yeah, so PP is quite interesting. I had the momentum breakout. It's pulling back. I mean, it needs to hold the 200-day,
Yeah,
which is 28.12
but
to,
it's looking positive, right? Yeah.
yeah, I mean, the breakout still gives you 34 on the upside. So as far as a risk management level goes, I'd be looking at the 200-day.
No, I could go long this. It's fine.
Yep.
Okay, J&J. This one's painful. This is my hedge.
Yeah, I mean, the interesting thing is the bait. So remember, longer term, it's still a range of 142 to basically 173.
Yeah.
The short-term base that you had here, the upside target was 165, which it's met.
It died
And
right away.
into that 165 target, the momentum has slowed.
Yes. It was it a divergence? It is, right?
Yep.
Small one, yeah. Oh yeah. That's right. So this one is still more negative, right? Or it doesn't say anything.
Well, it
Upper
looks
trade to the
more,
173.
there's, could it grind up in slow fashion to 173? Yes.
Mm,
But, Pfizer looks like a better buy because of the momentum profile. So does BMY.
yeah, I understand that. Okay, that's fine. VRTX. Can't see it here. It could be a different tab. Oh yeah, here it is. No, this is VKTX. But it's okay. We can talk about this one first. Yeah.
So this still has that basing pattern. It has the clear divergence, right?
Oh
So
yes,
this is
divergence. Yeah.
yeah. This is a cover short bottom fishing buy.
The range is so narrow. There's not much anyone could have done about it. Okay.
Well, I mean,
Oh yes.
breaking through the top of this range. This is a wide range. I mean, percentage terms, this is 30%, right?
Yeah.
It looks small, but the percentages, so it's a wild ride, that one.
Yes. This is the potential rival, the Lily. Okay.
Yeah.
Then
So
Vertex.
VKX was
No, VRTX. Yeah, that's right.
So yeah, once that had the divergence, it broke 50-day. So I think best case is you are seeing support at the lower boundary of the old trading range
All right.
that the stock tries to stabilize here. But again, that's probably limited to a small range of 462
Yeah, but
to
is this a
480.
short? Is this a short, you think? Not really, right? That does not form a divergence at all,
Well,
right?
it has formed a divergence into the highs here.
Oh yeah. I mean the bottom. Yeah.
So what I would look for is a break of that 461 to add to the short.
Okay, that's fine. Then Gilead. GILD. Yeah, I know, to the right. Gilead, BIP, and SRPT.
Yeah, look, this was recaptured its old trading range, and the bottom end is now expected to act as support again. 50-day has been respected.
Yeah, and it was
Momentum
a high
did confirm these
momentum.
highs, so there's
Yeah.
potential that it can trade higher within that range.
A bizarre name. Okay. Then two taps to the right. SRPT.
So again, this failed to better the 157 area. Since then it's rolled back.
I should have thought that this junk. Yeah.
And bottom of the range, support does come through at 113, 114, and the 50-day basically at 120.
But that means it's not a good shot, right? It's facing some support, right?
Well, it's coming into some support. So, potentially as a funding short, yes, but as an outright directional short, yeah, it looks like its downside's limited.
But what about the last high that in June that the momentum confirmed it, right? What could have told us that was wrong?
I mean, just this intraday reversal.
Oh, okay. Should have shorted this junk. I saw the momentum high. I gave up. Okay. Then two taps to the right, NBIX. Yeah, that's all.
This does look like it's trying to break out of the range. Look at it there. Let's just go through the little detail here. So 67.94. So this RSI high is marginally higher. I call it the same, right?
Yeah,
Rate of change between these two peaks is the same, so pretty consistent trend. So I'd definitely be giving the benefit of doubt to the upside. That you can trade up to 167, and you can use the 50-day as that sort of risk management stop level.
Yeah, we need to own this. Okay, that's great. Then two taps to the left, I see EXAS. This one was a miss. Wow, momentum confirmed it. Right.
So, I mean, you started to see slowing. It's not a massive divergence, but you June into that July.
Yeah.
Um,
Such a tricky small little divergence.
yeah, I mean, the other thing that divergence and followed this little range that you broke out, and that's turned into support. But it's now, that's all sort of history.
Yes.
It's now at the bottom end of the old range, 200-day.
If it breaks out, then it's a different story, right? But
well, then you back into the old range. So, I mean, you could have a very tight stop here, looking at, using the 200-day as the stop level.
But what about the most recent momentum? That was a high, right?
So this was a high here. You're retesting that area now, and the RSI is lower. So you could use the 200-day as a stop level if you wanted to try and short it.
That's super helpful. Okay, that in the previous tab I see BIIB and mRNA. Left. Yeah.
I mean, this still looks weak oh no, it's met the downside target from that trading range breakdown, but there's still no slowing downside momentum. So the risk is that this bounce here, fails again, and 190 is your support area.
This it's a tortuous shot as well.
Yeah.
Okay, got it. This size. Okay, mRNA. It's 10 taps to yeah, this one.
It's again another one where we've broken down. We've met the downside target.
Yeah.
There's no divergence, and even there's some support here, and then at 67.
Okay, no divergence. That's perfect. Then ISRG SYK BSX.
Look, this is trying to break out again, but you're not really getting any new momentum signal.
This is an incredible stock, man. Yeah. Is it a
It's more of
short?
well, I think you can short it with a tight stop. Remember, this
Mm.
was slowing upside, so it's not breaking down, but it's definitely an uptrend slowing. So yeah, take profit at the very least, and you can use the intraday highs back in July as your
Got it.
stop level.
Yeah. SYK.
So this does look like it's respecting basically 200-day and the lower boundary of its trading range.
Mm.
You know,
But not a divergence. Yeah.
not a major divergence, but definitely respecting support. So you would think that you
You
can
give the benefit
continue
of the
to
doubt.
hold the trading range.
Yeah, yeah. Okay. BSX, just to the right, next to it. Yeah.
So no divergence here, but again recovered towards the 50-day. I suspect, best case would be time based, where 79.80 is your resistance and top, and basically, you have support at the 71.50, $72 area.
Oh, okay, okay. Wow, but this one's still going back up to the 79, right? It looks like it, right?
Yeah, I mean,
Yeah.
it doesn't give us much of a trade setup here with momentum still rising. So it's not as if there's a divergence or clear sort of top.
Yeah. Okay. Then about 8 taps to the right, BDX. Yeah. Yeah, yeah, to the left, yeah. BDX and MDT and
BDX,
EW.
you can see, we're still in this neutral range. There's not much to view on this one, and that we're still looking at 224, 225, the bottom end, and basically
I'm going to use
248,
this as a funding
250, the
shot.
top.
Yeah, yeah. Okay. Then MDT about 10 taps to the right. To the right. Yeah. Yeah. Right. Yeah, that's MDT. Yes.
So quite similar. And you essentially still have held that range, 78, the bottom end, and
But when
the
you
top
broke
end.
the range, right? When you broke 78, I'm amazed. Oh, there was a divergence. I
Yeah.
see.
So RSI was higher.
Ah, it's so annoying. Okay, that's MDT. EW and BAX.
It has stabilized, as you can see there, with the retest.
Mm.
And Friday, it does look like it closed above this short-term high. So basically, this stability here and range that you've got does give you an upside target of essentially $70.
Okay. Well, I'm amazed. Okay. Is BAX here? I don't see it. It's not a frequent ticker, but I just want to cover it. Oh, well, how do you know that?
Uh,
Yeah.
was up. If it wasn't there, it would have to be reloaded.
Yeah.
But basically, you had your divergence here, had your breakouts,
Yeah.
you then had your higher range. So let's just go through this. This last breakout gets you 39.63 on the upside.
Mm.
That short-term base has played out, but yeah, 39.63.
And the momentum currently confirms it, right? Yeah.
Yeah. So, I mean, this could work its way back towards that major resistance at 43.
Okay, fine. There's nothing to do there. Okay, Dexcom, DXCM. It's not this page, I think. Yeah, DXCM, PODD. Ah, yes, yes, yes. All these, yeah, you can do this one. What? This thing says nothing?
I mean, you can see the range that you've had since April.
Yes.
And this, I mean, it's not closing at the lows, but you're basically back in the range where support's at 160, 161.
So this is a range stock. I see.
Yep.
I see. Then INSP, right to the left of it. Yeah.
So here you do have, that short term, well, you've had this multiple divergences over the past 3 months,
Mm.
broken above 50-day, broken above 200-day.
Oh, it was
So
at 124. What?
yeah, well,
What was I
intraday, right? And,
doing?
and that was on Monday.
Yeah. Okay, when the world's falling apart,
Yeah,
I
yeah,
get it. Yeah.
exactly.
Yeah. Okay, that's fine. Then the far left, DXCM, I see it there. Yeah, that's all.
Well, I think this one we talked about, divergence didn't hold, gap down, momentum's confirmed these lows.
Like EW, right? Yeah.
Yeah,
The two of
EW
them
landed
go
up
up.
retesting, but that retest was the bar because it formed that short-term double bottom, right? But
Ah.
yeah, this should retest. Remember, EW gap down, rebounded, retested, divergence, and
Oh,
now broke out. So this gap
oh,
down here, 63 looks like it should hold as the floor and
yeah.
provide you the short-term base if it's going to trade like EW.
Okay, that's awesome. Then Thermo, TMO, DHR, IQV.
I mean, this is interesting in that momentum confirmed the highs here. It's pulling back.
Mm,
It should try again to
push up.
break or confirm a break above 607
Mm.
and potential to trade higher from there.
But then the divergence will form, right? If it tests 625
Yeah.
again.
Well, yeah, if it tests and momentum's lower, yes, a divergence will form. Yeah.
Yeah, okay. DHR. Because I'm trying to be bullish the market. That means I
Yeah.
can't be long pharma. So I need to
Yeah.
be. But these quality ones are so crowded. That's what it's saying, right? Yeah. Same thing.
Well, yeah, again, it's pulled back, but it did have momentum at the same level. So, I mean, TMO looks a bit cleaner.
Mm.
It's sort of gapped up and sort of holding. And remember, like TMO, it's not just those two peaks there. This goes back to the highs going back to 2022.
Mm. I see. IQV. It's in the middle of the to the right. Yeah. To the right. Yes, that's the one. I realized I forgot to do Abbott just now.
Yeah, I mean, another messy range, right? But you clearly hesitating around the 240 mark.
Uh oh yeah, and it's a negative divergence, right?
Yeah, that last peak, again, not a massive divergence, but over a
Yeah, should shorter that.
2 week
Yeah.
period. So definitely, looks like we stay back in that range.
Okay. And since we are here, right, just ABT, I missed out that to the left. Yeah.
But the divergence, the base, I mean, it has pulled back here, but this does look like it's a viable pullback because this breakout gets you 118 to 119 on the
Oh,
upside.
yeah, but if it closes below this 109 and it's back into the range, or not really,
Well, I
right?
mean, I would use either 200-day or 50-day as
Yeah.
a stop level. So I think 200-day could keep it really tight for that
Okay. I
118.
I was hoping for it as a short. Okay. Agilent, one single A. I think it's the other. No, it should be here. Oh yeah. Left. Yeah, that's the one.
So, I mean, again, if we're talking about the lows, support area, the divergence, the double bottom, the breakout of this base, the pullback again to the 200-day. So I'd be using the 200-day as a stop level.
Yeah.
And this sort of original base here gets you up to 148.
Wow. Okay. I see. No, this is good. But it's the previous little peak. That's not momentum confirming it, right? It's below. It's like a divergence, right?
Well, this peak is higher, right?
Yeah.
This
Yeah.
peak is lower, so there won't be a divergence unless you're making a new high and a low
Yeah.
momentum peak.
Yeah. Okay. That makes sense then. Okay. Then UNH.
So, upper boundary should now act as support, but you do have, that last leg up last week did give you that short-term divergence. So,
Mm,
I mean, I guess at best the message here would be a trading range that
at
works off that divergence where,
546, right?
yeah,
Yeah.
yeah, the 545, 550 area act as support and you get another push towards 622.
That's very helpful. ELV and CI. Yeah, that's the one. Yeah, they're all here.
On CI, then at a 2-day attempt to break out, you've fallen back. So essentially, you're trapped between the 200-day and 346 resistance.
And ELV.
Again, another trading range where 490 support, 550 resistance, and you continue to sort of chop in that range.
Okay, so there's no signals on any of these
No.
guys. Okay, but MCK on the right of it, two taps to the right. That one had a blow up. Yeah, is this a buy or is this a sell? Oh,
I mean, interesting that didn't get a divergence at the peak before the blow up.
yeah. It was so stable and then suddenly exploded. Right?
Yeah, I mean, there is 200-day support, the lows that you made in April. So that's like the indices 200-day and April lows.
But how do you know whether we can buy this slam or not?
Oh, and again, this is, determined before sort of manufacturing a trade. You don't have a divergence, so all you got to rely on is support levels. So 200-day. So where we closed on Friday, your downside risk is 3 to 4% or 3 to 5%. But again, is it attractive? Because your upside, let's say it bounces back to
the red line,
the previous resistance, it's marginally in favor. So to me, a 4% weakness might be a bit more interesting from a risk reward setup to manufacture that trade.
I guess.
Because you don't have any other setup to really work with.
Yes. Then 2 taps to the left, Humana, HUM. Yeah. Just checking all these in case there is a trade.
Again, no divergence here, and it's also slipped below the upper boundary of that prior attempt to base out. There is some support on that intraday low, the highs that you made in April. So, 334 is support. Maybe you get a divergence when you test that.
This one, I hope we get the 300 again, then we can buy it, right? Yeah. Okay, got it. Okay, then we're good with these names. Can I take a look at Astellas in Japan, 4503? Maybe you have to show me the tiles. 4503.
2 or 3?
Yeah. No, there is.
Two or 3?
Three.
It's 3.
Oh well, both are fine. I'm using this as a funding shot. Yeah.
So we did this peak here, tag the upside target, which was 1761. It also formed a divergence, but interestingly, it has respected, 1590 as support. So you basically got a trading range between 1590 and 1760 currently.
But is there a risk of a bounce? Not really, right?
Well, it
is a trading range.
For me, it has bounced. On the intraday low, it has bounced, but it's now more of a trading range now, right?
Yeah. Okay. That's a funding shot. Okay.
Yeah.
Takeda. Yeah.
So again, bit of an intraday, two days of intraday volatility, but you basically bottom of the range at 4,000. 4,400 top of the range. So yeah, it does look like a funding short still.
Okay, that's fine. ASI 4523 and then 4528. Oh yeah, left. Yeah, that's the one. Wow.
So no divergence, but I mean we have met the downside target on this breakdown, right?
Oh yeah, it's exceeded. So I should leave it alone, right? Yeah.
Well, I would say this could be like EW where you retest the lows and you then get a small divergence and a small base.
Yes.
So I mean, if you're very nimble, you could probably play the downside for 10%, right?
Yeah. No, no, it could work because we just want to avoid TPX. Okay,
Yep.
that's very helpful. Just right on it, 4565. Then let me rush two more tickets through. Yeah.
So, I mean, the broad range is still pretty much intact. You got close to it, you've bounced off it. There's no divergence. I mean, if it did come back
Ah,
towards
the
1300,
1300.
it probably sets up a divergence, which makes it that bottom
Yeah.
fishing buy.
Then one tap to the right, 7733.
Next one's about to start.
Yeah.
Sorry.
Apologies. Yeah, no worry. I'll just
So yeah, the old resistance is now support at that 2270 area. So
Ah,
it looks like we're getting a higher range. I'd suspect that the
wow.
50-day, the lower boundary, so a range between 2270 and
Yeah.
2580 looks likely.
Okay. That's very helpful now. I have one more ticket about it. I'll just leave you here. I'll
Okay.
tap it in. Thank you so
All right.
much, Lawrence.
Thanks.
Take care.
Cheers.
Bye
Bye.
bye.